Hey everyone, hope you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. We're going to dive right in, take a look, and see what people are sharing. If you want to follow me at _finance, and if you want to join our community, finding-value.com, I dive deeper into all of these topics, subjects, looking for potential investment opportunities, sharing that with the community, imparting whatever wisdom I have against your questions during the weekends, during the question and answer sessions. We hold those on Saturday and Sunday at different times so I can capture everyone throughout the world. We've got a special coupon code that is active. Special is the coupon code if you'd like to sign up and join. If you're really interested in looking at companies and what companies I think are the best way to play the commodity bull market that we're in, definitely try it out. We've got a 50% coupon code. It's special is the code for a 50% discount on the monthly membership first month only, and a larger discount on the yearly membership if you'd like to sign up for a year or switch from a monthly to a yearly. So, Market Sniper. We've got the deterioration of relations between Trump and Israel may have been fabricated as a psychological phase before an all-out war with Iran. And Market Sniper says, correct. We already stamped this fake ruse out. So what are they planning? A false flag to become sudden friends again, a preemptive strike from Israel on Iran that U.S. says it had no knowledge of, because we distanced from each other, of course. Will Israel go straight to hard, outright nuclear attacks if Iranians slaughter millions of civilians? And the U.S. will feign shock and disgust. It is a precursor to something. It would also be a nice distraction for the debt-based, bankrupt America. So what about these false flag events? I know a lot of people talk about a false flag event or a demand destruction event, some sort of event that happens. Well, let's do the 2 and 10 curve. And what I'm showing here is the 2-year and 10-year. Every time this dives down, and some people put the 10 first and the 2 first, and it just inverts up the curve. But 9/11 occurred during this time frame in 2001, this big kind of off the cliff jump lower. The housing market crisis was here. And then the C-19 event was over here, where we rolled over and dove off a cliff. We're rolling over right now, and maybe we dive off a cliff, and maybe that is something that they call a false flag event. So every time we get these events, they've almost always coincided with a rollover in the 10 and 2. This is the 2 and 10. I like seeing it this way because I like seeing it come back and rolling over with the stock market. That's the way that I view it. Other people will be like, oh, it's got to be the 10 and 2. It's got to come back up. Okay, whatever. But maybe some sort of event brings this lower. It's done it in the past almost every single time. They use false flag events for printing money. For printing lots of money, for lowering interest rates, and doing a combination of those two things, stimulus, whatever it is, and then everybody kind of gives up in the system. They're like, oh, you know what? We can't do this. We'll just say we're going to have lower earnings and just go with the flow, and everything kind of cascades all over. Is that the case? I don't know. We'll have to wait and see. I don't know if we're going to get that knee-jerk reaction into the bond market like we have these past couple of times. It may be something where we don't go lower, it actually knee jerks upward, maybe, where people don't want the bonds and they don't want the dollar, but they need to sell those bonds. Life hack: never give a 2 weeks notice when you're leaving a job. Now, I don't know. I mean, they don't give 2 week notices for people who get laid off. The difficult part here is if you give a 2 week notice, there could be the potential that they walk you straight out the door immediately. Because if they think that you're not in it, they're going to walk you out. So I could see from that perspective not giving a 2 week notice before leaving a job. You just tell them, hey, look, my last day is today. I'm out. Other people will say that a 2 week notice is customary and that you should do it if you want to stay faced with the company that you're leaving. Um, I gave a 2 week notice when I transferred internally from one company or group to another company or group within the same company. So I gave a 2 week notice when I swapped. In fact, I gave more than a 2 week notice. I gave more like a 4 week notice saying, hey, look, I'm going to be gone in a month. I'm going to be moving to another facility. So if it's within and internal, I mean, I think that's kind of something you have to do. If it's external and you don't want to work with the company that you're at, then maybe you don't give a 2 week notice. I don't know. They can walk you out if you give a 2 week notice. So it really depends how much you need the 2 weeks and the money. Um, that's what I would say. In order to succeed, you must first survive, says Warren Buffett. And Manish Pabre says, if we as investors fixate on downside protection, the upside in many cases takes care of itself. If you can put floors on the downside, then you've got a huge advantage. And, I don't really know what that exactly means. I know what it means to some extent, but I don't know what that means in its entirety. Um, if you fixate on the downside protection, the upside in many cases takes care of itself. If you put floors on the downside, and then all you can really do is buy stuff when it's undervalued, but that doesn't mean that it can't get cut in half again. So does that mean that you're not putting a floor underneath it? What does it mean by putting a floor underneath your downside? If you buy something that's undervalued, you can wait it out. You can just sit, do nothing, wait for the market condition to swing back around, and it will bring you back up. So that somewhat limits your downside, but it's not like you're putting a floor underneath you on the downside. The best thing that I've found is basically wait for chart patterns to bottom out. You get some sort of pattern. You find undervalued companies that also have good patterns. You wait for the market conditions to come into cycle, and then you invest. That's about all you can do. And I think that's probably what they mean by downside protection is don't chase overvalued stuff where prices are just going up and you don't know the valuation of it. The protection is your valuation. Another protection is something where the sector itself is out of favor. Its sentiment is bad. It's out of favor, and the sector itself, like say the commodity, is cheap. So right now, the cheapest commodities out there, some of them, we could use that as an example, maybe natural gas or oil, which is cheap. So that's kind of, I think, your downside protection is buying when it's out of favor, it's down, and you're not chasing price. That's really what I think it means. Jessica says, if you could sell all your assets today, walk away with 10 million in cash, and park it in a steady 4 or 5% investment, would you take the deal? No, I would not take that deal. What I would do is I would keep the money that I have. I wouldn't sell everything. I would put it into other things that don't make a steady 4 or 5%. A 4 or 5% is literally saying, I am going to get some sort of fixed investment at 4 or 5% interest rate and get decimated through inflation. And I think inflation is probably going to be higher than 4 or 5%. So you'd be losing purchasing power over time. And depending on what the inflation rate is, if it goes much past 4 or 5%, which I think it could in the situation that America is in for could be a pretty long time, it's going to decimate that $10 million in cash. It would be the same as going back into history, saying that you're going to do the same deal 30 years ago, and now you're just using a different amount. So let's say it was $1 million and a steady 4 or 5%, which means you're earning $40,000 or $50,000 in income off that money. So 30 years from now, 10 million is probably the new, 100 million or something. So in order to keep pace, the value of your currency is declining faster than that 4 or 5% return. So I wouldn't take it. What I would do with the money, I would look at physical metals, I'd look at some other asset classes, and then I would spread it across large asymmetric bets across a whole bunch of different sectors that are really good. Let it ride with some of the money, and then have other money, which is in physical metals, that's a lot less risky. So I mean, that's partly what I would do. And another portion would go to somewhere else. Squeaky Mouse says, for everyone who's debating on whether or not to buy silver, here are the main reasons that he purchased. Each year, we are seeing record highs of silver use in industrial demand. It is mined out of the ground at a 1-to-8 ratio, but is currently sitting at a 1-to-103 ratio. It is a safe haven for your money. Last but certainly not least, this chart is below of a big cup and handle. And that looks to break the upper right-hand side at some point. I have different reasons. One of the reasons that I would purchase silver is that it is out of the financial system. So physical silver is a choice to get out of the system. It's also shorting the dollar, which is good. I would love to short the dollar here. It's another, so it's a way to kind of get out of the dollar. It's a way to get out of the system financially. It is undervalued. When you price it against financial assets, when you price it against gold, when you price it against all these other things. And it's got that incredible pattern that he's showing there as well. So that's kind of the way that I view it. And getting out of the system is the big one that I would put as number one. And silver does have a lot of uses in terms of industrial demand. I think it's number 2 in the number of uses, not volume, but number of uses. So I think it's a really good bet from that perspective as well. And I agree with this number 1 there. Coming down, here's a couple of quotes. You have to look for a special area of competency and focus on that. Go where there's dumb competition. Well, I don't know if there's dumb competition. I mean, if out of all the asset classes, if I were to look to see where the dumb competition is, where would that be? And I don't know if I can tell you where the dumb competition is. I think the dumb money is located in AI and NASDAQ and crypto. I don't think that's where the smart money necessarily is. It almost feels like they're herding the sheep to go towards those asset classes. And the only reason I can think of is you can't run as much money into tangible items because it's going to cause inflation. So they're running and chasing money into the intangible assets, and they're doing that based off of FOMO, the fear of missing out. They're just doing it. All the sheep is chasing prices. So that's what I think they are doing. It doesn't mean they are doing that, but that's what I think they're doing. Seth Klarman says the single greatest edge an investor can have is a long-term orientation. And most people want to make money in the short term. They just chase price. And that's what you don't want to do. So it's best to take a long-term orientation, go after the cheap stuff, be patient, and then wait for these guys to run all over the place and chase price. And hopefully they'll eventually chase the asset that you are in and chase the price higher of that asset class. Use link with platinum here. Platinum almost ready to break out, and you can see the similar fractal before the breakout of the 1980s and eventually 99 2000 breakout. We're in the same situation. When platinum starts to break out gold, break out and beat gold, that is when we're in the market condition that commodities are going to rip. They're all coming. This is the dude. It says they want you in stocks and crypto. Yeah, I agree with this. Yes, yes, yes. Real assets are the problem for the cabal. Notice they will never shine the light on silver, too. Americans believe real estate, gold are the best long term investments. They're wrong, advisors say. Okay. Advisors want you to be in their intangible assets that they can make money off you. They don't want you in gold. Peter Lynch says your ultimate success or failure will depend on your ability to ignore the worries of the world long enough to allow your investments to succeed. And that's the people who are always worried about the next recession. Hey, we're going to have a recession. It's going to be a recession, 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 recession. Um, you need to let your investments go. Just let them go. Even if you think there's going to be a recession, let them go. If it's a good company and the business is improving, let them go. Let them ride. And sometimes you might have to ride through some volatility. You can't make money by sitting on the sidelines the whole time. And you can't get rich if you never buy anything. I mean, you have to buy something at some point. Hopefully it's undervalued. And then you have to wait for it to appreciate. The only way you can really make purchasing power gains is buy it and sell it for more, or collect dividends or something along the way. So a lot of people get too afraid, and they never want to get in. And then when they finally decide to get in, it's like they're chasing prices, which is a bad thing because you don't want to chase price, you want to chase valuation. Kevin says the speed of change in the narrative for the uranium sector has been incredible. Stock gains for the last few weeks are fantastic. The sector wears its emotions on its sleeve. It's easy to read. I have to thank Quakes99 for once again being one of the best money-making contrary indicators on X. Every time he gets pissy pants, threatens to leave, I've loaded up expecting a significant low. This time he marked a major bottom by actually bailing on X only to return after a 40% rally in the juniors. It's sentiment. Guys, the emotions run so deep in everyone. The market is such a psychological game. And that's what you have to basically try to master. It's control of your emotions, being aware of the psychological effects that the market has on other individuals, and then somehow figure out a way to stay calm when everyone's all going crazy and buy when everyone is fearful. It's like you have to reconfigure your brain, reconfigure your psychology and emotions to operate differently. This isn't a time to fit in with society. You have to almost do opposite of everyone in society. And once you figure that out, you can kind of see the matrix in the game. The matrix in the game. Baker Hughes rig count. Oil's down 5, gas is flat, miscellaneous is -1. I do think we'll bottom sometime in rig count, probably this year. This year. So probably quarter three or quarter four would be my guess. That's when we'll bottom for rig count. But that doesn't mean that the bottom in the rig count will be the bottom of the drilling companies. The drilling companies will probably bottom before that. It'll bottom before that by however many months because the markets are forward looking and they're pricing in all of the information that the companies are basically coming out with. And if they talk behind doors, they're pricing that in too. So I think that they may have already bottomed and that this is all priced in. Maybe. Barron says Saudi Arabia is poised to force oil prices down. Trump has opened the door to a new Saudi oil price war. Markets should prepare for a sharp downturn in the oil price, analyst with a satellite oil tracking firm write in a guest commentary, May 8th, 2025. I think this is fake news. I really do. I think this is fake news. I think they're trying to jawbone the price of oil lower. I don't think it's going to work, but that's my guess. Uselink, this is Sput, good old Sprott Physical Uranium Trust, a cup and handle for the Sprott Physical Uranium Trust. The implications of resolving to the upside means that the uranium spot price will see very, very elevated levels over the next 3 to 4 years. So there's the cup and then a potential handle that we're building. And whenever we break out of that handle. Here's Tracy. She says, according to Baker Hughes, the number of active U.S. oil drilling rigs has fallen by 15 over the last 5 weeks to approach its lowest level in nearly 4 years. Multiple U.S. shale drillers have announced spending cuts in earnings calls this week. So this may be just the beginning of a pullback in drilling. What do you mean the beginning of a pullback? We've been pulling back for like ever. I mean, we've been pulling back quite a bit since 2022. But yeah, more rigs are dropping, and then eventually we'll hit a bottom at some point. I am surprised at how low oil prices are and that they're still down here. I thought we would get a nice kind of quick false breakdown or something like that. And we'll see. We'll see. It could still happen. 82% of adults in the U.S. make less than $100,000 per year. Don't let the internet fool you. Making $100,000 or more per year is still a great achievement. Yeah, that's 82% of adults in the U.S. make less than that. So 18% make more than $100,000 a year. That's pretty good. It's not too bad. This is global petroleum inventories are at the low end of the 5-year range. There we are, right at the low end. This is total oil stocks, crude plus products, drew by 1.5 million barrels last week. Drawn down towards the bottom here of the 5-year range. Oh, but we should still get lower oil prices, right? Let's push oil prices down so we can go way down in our inventory levels. So this is the Federal Reserve is not running QE, quantitative easing. The Fed asset dropped to 6.7 trillion in May, the lowest in 5 years. The central bank is still buying some treasuries, but in the form of reinvestment to prevent the balance sheet reduction from running down too fast. So when people are posting that the Federal Reserve is buying bonds, they're doing that so they're not doing quantitative easing too fast. They're slowly bringing this down. And some of them, they are rolling over, selling bonds into new bonds. So it may not be as QE as what most people think. Yeah, Baker Hughes rig count. If you want to see the rig count, this is what it looks like, -5. And there it is from 2022. We've been pulling back from there. And then the U.S. gas rig count, you can see from 2022, 23, we've been pulling back. And it does look like it's trying to bottom here. It does for gas rig count. I think this is trying to bottom too at some point here shortly. U.S. oil drilling activity is collapsing even in the dominant Permian Basin. It's not so much the decline as where it's happening. The Permian Basin requires 300 rigs to get even minimal production, but it's getting farther and farther away. Real problem is we've already been seeing this trend for a year, and it's likely to accelerate with the recent oil price collapse. 3 years ago, everyone laughed at the idea of a permanent plateau in U.S. shale, but now it's becoming a reality. And we're at, looks like Permian, 285 rigs, -2. And he's saying that we need about 300 rigs to get even minimal production. Well, we're below that. Let's come back. Geopolitical chaos always happens after the Friday futures close. And that's massive blast heard in Pakistan. That's because they don't want to disrupt the market. They keep it on the weekends, baby. They keep it on the weekends. Here's frac crews. Year over year, we are down minus 63. We're at 195, which is minus 6 week over week. Note around 90% are in oil basins. There we are, pulling on back. We are at a pretty low level for frac spreads. This is kind of your fracking for oil production. So you have drilled uncompleted wells, and then you get the fracs here. And that's it. That's all we've got for today. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Use that special coupon code. I have uploaded everything to the website for the Q&A session that happened on Saturday. So that's all I've got for today. We'll catch you next time. This is Finding Value.